Hey everybody, good morning. It's Sunday morning. Thanks for coming out here. This was sort of a short notice presentation. I sort of decided to do it Friday as I was doing the earlier presentation on the release of Orderflows Trader 7, and I thought it'd be a good idea once more people started using Orderflows Trader 7 to sort of give them a groundwork of what some of the new tools, how they can be used in various markets. So I'm not going to keep this very long today. I'm going to try and keep it short. I'm going to try to keep it under an hour. And I just want to put this out there up front. If you hear me coughing, I apologize. I'm coming down with I hope it's not COVID. There's a lot of COVID going around now in my kids' school and their soccer stuff, but hopefully it's not that. But if I cough, I just need, if I pause for a second and you don't hear any sound, it's because I'm drinking some water. So let's just jump right in. I don't have anything really prepared, like any slide set for it because, I don't think you really need that. Um, I had talked about on Friday that I was going to take a look at some different markets. I spent Friday the presentation talking about e-minis, showing all the tools on the e-minis, but I know a lot of you guys trade other markets like the currencies, bonds, crude oil. So we're going to take a look at those markets today. Okay, let me just get my notes out here real quick. Flipping through some pages. Um, yeah, and just really quick, this is being recorded, so you will get it on the replay, and we'll post it up on YouTube as well. Lynn says the update is awesome. Well, thanks. I appreciate that feedback. It's always nice to hear from traders that get value out of what we're offering, in terms of reading the order flow. Good morning, Alexander. Gord, good morning. Vito, Neon. Yep, Jeff, we are recording. Juan. Um, yeah, I'm going to get into some of the techniques with the order flows trader software. Anthony, Luciano. Good morning, guys. Armand. So, okay, now just really quick, when you first load the order flows trader software, this is crude oil. Now this is an 8 range chart. So I'll just show you here. Okay, when you load it right on to your chart, um, the settings that come up, right, all these defaults that you see in here are sort of, it's your starting point. It's not what you have to use. Okay, so, and then the only ones that are enabled are the delta divergence. Okay, I'll just go through here. So you can see delta, there's a little checkbox next to each tool, right? It says enable, right? Align POC, enable. Buy and selling tells, enable. So you'll see delta divergence is enabled. Now I'll just turn it off. I'll turn off whatever I got turned on here just to keep the starting point clean. Prominent point of controls, I'll turn off. Now, the reason why the default setting is set that way is because that's what I use as my starting point for most markets. Then, depending on the market and the chart type, I will go and modify it. Now, the next question that I get a lot is, what's the best chart to use? Is it a time-based chart? Is it a range-based chart? Is it, a tick-based chart, Renko chart, etc.? Honestly, it doesn't matter. Really what matters is your own style of trading, your risk parameters, right? Your risk profile, so to speak. Are you willing to take more risk or less risk? For example, okay, this is an 8 range chart on crude oil, okay, which I'm fine to trade. I'd rather trade probably an 8 range chart in crude over a 1 minute or something like that. But there's people that want to trade a little bit faster. They're going to use maybe a 4 or 5 range chart. And some people maybe say the volatility is a little too much. Maybe if we go up another $20 in crude and we're trading over $100, I might expand it because the volatility, as price goes up, so does the range. Okay, so if we go up another $20 in crude, I don't think using an 8 range chart would yield the same results in my own analysis, simply because now we're getting quicker moves because now we're trading $100. And a perfect example is like E-mini S&Ps, right? We're trading over 5,000 now, and I wouldn't use a 4-range chart anymore that I used to use 7-8 years ago when we're trading 1900 2000. So we've doubled in price in the S&Ps, and for me using a 4-range chart is just too much. So we'll start with crude oil. Okay, so crude oil 8-range chart. Again, don't get caught up so much on the chart type, whether it's a range-based chart or a tick-based chart or a time-based chart. Find a chart that works for you and that, more importantly, puts the order flow in a format that's easy to read, because all these numbers in here you're seeing on the footprint, that is just data, right? So you're trying to analyze the data as easily as possible, right? And so if you're using a 4-range chart, it might be too fast for you to understand what's happening in the data, right? If you're using a time-based chart, you're constricted by time. So as you get closer to the end of the time period, the bar is pretty much formed. Whereas on a range-based chart, the bars are formed based off of price movement. Okay, so crude oil. Okay, now there's a lot of new tools. I'll spend some time mostly talking about the newer tools today, but I'll mix in some of the older tools as well. So I'm going to talk about crude oil. I'll go into bonds and tens, euro currencies, and we'll take a look at mini Dow later. Okay, so it's 4 or 5 contracts. Now, all these tools that you see in here, right? There's a lot. I do not recommend that you add everything all at once. Okay, because if you do, you're going to get a lot on your chart, and it's going to be a lot to try and make heads or tails of, right? Because again, more is not always better. We have the tools there because so many people trade so many different markets. Myself, right? I trade markets that 99.9% of the traders out there don't even look at, right? Palm oil in Malaysia, right? And that's just a pet market of mine because I've traded that since basically the 1990s, right? I spent a lot of time in Asia and Singapore, and I would travel up to the palm oil places in Malaysia because I work for a trading company. And there's certain tools that I find work better in agricultural markets than maybe the stock markets or the stock indices. So we'll talk about the new one, PLC Wave, right? Because this is a pretty popular one that I first wrote about years ago. And I'm going to make one little change here. Okay, so the POC, just so it's a little easier to see, I have the opacity set at 50. I'm going to set it, better say at 20. I'll make it 50. Just so it's a little easier for you to see on the chart. Now, so you can see it's going to put this box around where the POC wave comes in, right? You can see the green bar, then the red with the higher point of control, red with lower point of control, just as here, right? Red with the green, lower point of control, higher. It's just simply a pattern, all right? That's all it is. It's nothing more than just a pattern. Now, you'll see like in an area like this where market is going sideways, you often get over and over, right? You see it's coming in one, it's overlapping even here, 1, 2, then consecutive, then one here, and then it breaks down, going into the close. Now, when you're looking at the POC wave, okay, now there's a couple ways to do it. You'll notice there's this red area drawn at the top of the bar, the blue area drawn at the bottom of the bar. And really what's that's signaling to you, right? That's an area where, if you're going to place a stop, that's where you would place your stop, right there at that area, just below that actually, because this is where the wave is taking place. Now, what some traders, myself, I've advocated in the past about is, let's go to the setting. Where are we here? POC wave, right? There's a swing filter. okay, right here, enable swing filter. And that's going to be linked to the global setting of swing period, okay? So when you do that, it's going to show the POC waves, right, that are coming in at swing highs or swing lows based off of a particular period that you've set, okay? So you're going to see, one here, one here, one here, one here, and even back here, right? It cleaned up a lot of that mess. Now, it is a global setting, okay? So if you're using some of the other tools on here, for example, delta breakout or delta divergence with the swing period, it's going to be linked to this swing period into the global settings. But if you really want to have sort of, I'll say true swing highs or true swing lows, you can set it at a higher period, okay? Because the higher you go, the bigger swings it's going to look for, right? 5 is pretty tight for most traders. 10 would be another level. I would do like 5, 10, 20. I mean, you could do 5, 10, 15, but 5, 10, 20, and go from there. Now, so you're going to see, right? This one's still there. That one is there. You have the one here, just sort of went sideways here, just sort of went sideways. Here, 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 here. Now, on a range-based chart, okay, this is one of the differences of a range-based chart versus a time-based chart is I'm always a big believer in what I call the trade entry signal. I have this programmed into a lot of our individual tools. And really what it is, it's let the market take you in to a position, okay? And so basically, right, you see the blue box here in the middle. Okay, so this is the low of the wave. This is the high of the wave. What you want is a breakout above this high, right? So the market is going. Now, in a range-based chart, you're always going to get that, period. Sometimes it's going to go, you might just go 2 ticks like here and then go back in. On a time-based chart, right, obviously it's formed different, and you're going to get a lot of bars that you got the high of the wave and then you go inside for a while, right? You don't get that initial sort of breakout. So if I were to change this to a 1-minute chart, right, let's see, this a little smaller, go back. So like here's a bullish wave, but obviously we never get above the high of that bar. Here's a bearish wave, right? Next bar goes inside, and then you start breaking down a little bit, and you get a little bit of a move down. Go back. Excuse me. Again, bullish wave, inside, inside, and then you break out and go higher. Here, bullish wave, 1 tick higher, pull back in, then you start moving. That's sort of the difference that, depending on the chart type you're using, you got to keep that in mind because, if the market goes inside on you in the next bar, then you're sort of not getting that initial, let's go back here, right? You're not getting that follow through, right? It doesn't come until 3 bars later. So really, you want to see the market moving in your direction because, you really, with the wave, is you're trading a breakout, right? Because what's happening is you can see here, right? The point of control on this red bar, right? It's even an aligned point of control with the previous bar. Then you start trading lower, right? And volume is going lower. Then it sort of spins around, I'll say spins around, but it puts in the heavier volume at a lower level. And often what's happening is, there's passive buyers in here absorbing whatever aggressive selling is taking place. Aggressive selling dries up, and then it's aggressive buying, and you move higher and you put in a higher point of control. So now, volume, bar 1 is kind of neutral. You go a little bit lower, volume is starting to go down, price went down, volume went down, but it reversed, right? And then it reversed into the next bar and volume starts going higher, right? The same would be true on the opposite side on a red candle setup, on a bearish setup. But you still need that order flow to be bullish. And in this case, it took 1, 2 bars before it popped out here, and it went up about 20 ticks there. Now, if you, again, if you're on a, the range-based chart, okay, right, every next bar is a breakout of the previous bar, right? Because that's why it's a range-based chart, right? Because price is moving based off of range, so you're not going to run into that. So that's sort of one of the little nuances if you're using a time-based chart or you know a range-based chart. So that's the POC way. But quickly, I want to talk about um, one of the older settings, market weakness. I'll turn off the wave. Market weakness, okay. And I'm going to use a swing filter. I'll set it back to 5. I mean, I could keep it 10, but I'll just make it 5 for now. Because before we didn't have um, the market weakness with, a look back period. It was just going to come in anywhere there was market weakness, like here or, or here. Now, what we found is if you're using a look back period, you can actually modify it slightly from 3 into 2. Okay. And again, whether you want to use 5 or 10, right? It's a global swing period. So if you're using the swing period on other things, it's going to affect that as well. But we'll just keep it at 5. Okay. So you can see again, here, there's a bearish one, there's a bullish one, but it's going to capture more of the major swings. So again, a look back of 5 will be a little quicker to trade, you know, here to here, here, and then here, right here. So, and again, if you're using a higher look back, it would, if I was using a look back of say 10, right, this one wouldn't show up. This one probably would. It would just filter out a few of them. Okay, so again, if you're, depending on the type of chart you're using, that's a range-based chart. On a minute-based chart, there's one. Here it just went sideways. Here, but again, with anything, with any order flow analysis, let the market take you in. Okay, here you get your signal of a bullish market weakness, and it's coming in. It's going to start printing as soon as it's showing in the order flow, and you just wait. Right, you just wait. You drop a buy stop in, a couple ticks higher than the high of this bar to get long. That's where you're going to get long. Just as here, you wouldn't short this one. Are we going to say, well, that's a failed one? Well, yeah. I mean, it's set up in the order flow as potentially failing, right? You can see how the deltas are getting weaker, right? 80, 65, 84, 54, 12, okay, which generally should be potential short. You even got like a bearish power point of control up here. You got some heavy volume, but the next bar doesn't go any lower. There was still more buying to come in at that time. That's why I say, all you'd have to do, right? You see this bar forming here, okay, and with a time-based chart, it's a little easier because you could add a bar timer, right? On here on indicators, NinjaTrader has a bar timer. You just scroll down here, bar timer, click on it, and it's going to appear down here on the bottom. Obviously, the market's closed, so you can see, but if the market was open, it would be printing, like it's just counting down how much time is left for that bar to form. So, if I'm down to 10 seconds and I see the market trading here, okay, I'll just drop in a sell stop right here. If we break down here, yeah, I'd want to be short. Just as this one, if I see the market, there's 10 seconds left in the bar, yeah, then I just drop in a buy stop, 1 or 2 ticks higher from where the current high is, and let the market take me in. Get in at 65 thereabouts, it goes all the way up to 85 before it finally breaks down. But again, that's like here, perfect example. It doesn't go any lower. Aggressive buying on this way up is slowing down, right? And because you got to think about what's happening in moves in the market, right? As the market is going up, you have a lot of aggressive buying, but eventually that aggressive buying starts slowing down. People start thinking, people that were long from earlier, they're getting long down here. They see it going up, then they see it starts going sideways. They start selling, right? They start taking profits. Not everyone's going to get long from here and get out up here. It doesn't work that way. Along the way, people are getting in and getting out of positions. So, that's why sometimes you see that pause, right? You see this move going up, then it pauses, goes sideways, right? 1, 2, inside bar, then it continues, right? Because it could very easily continue, which it did, or go sideways and then break down, right? We don't know until what we see in the order flow with the other traders, what they are doing. Okay, so that's just something that you might want to consider, especially with now we have that swing filter, the swing period, right? 5 for market weakness. If you're using market weakness, try it with the swing filter and set the sequence length a little bit lower. And just really quick, a lot of the tools, you could test them with the exhaustion prints. Um, depending on what you use as if you use exhaustion prints, your volume limit, set to 9. But if you want to set it to, a lower number, 3, you could do that. Looking for exhaustion at swing highs. I don't know if there was any here on any of these. Well, 3 is probably a little too tight. Let's take a look on the 8 range chart. Yeah, so 3 is just a little too tight. Well, here's a 1, here's a 2. Okay, you buy the 1 here, goes up a little bit, fails, fine. 2 here, just shoots up from 50. Excuse me. It's a $1 move right here, 79.50 to 80.50. A little failure here, But again, on a range-based chart, you're always going to get that initial market moving in one direction. So, because this bar formed and it's range-based, so for the next bar to form, it's got to take out the high by at least a tick for the next bar to form. So maybe on a range-based chart, you might want to use 2 ticks or something. Here was a short, here was a long. But again, that just gives you an idea of how you can start to use these tools that are there. Again, I'm not saying that you got to use 5. If you use, if you were to keep the exhaustion print at 9, who knows? I haven't even looked at that, but here's 9, right? Catches this move here, catches this move here. Not much of a move here, but from here to here, back up. Here's a nice move down. Another little move, but you're gonna get those small moves like that. So maybe, maybe you want to set a higher swing period. You can play around with it. That's the whole point of it. It's not for me to sit here and say, this is what you have to use in this market on this chart type. It's about me explaining how you can use this to build your own trading plan, right? Your own setups on what you're going to look for in the market. So let's just shift to bonds or tens. We'll talk about tens since that came up on Friday's call. Again, I'll just go back from the original setting, and I'll talk about some of these settings on what to look for in. Again, it's not that this is what you have to use in this market, okay? Because you can play around with it in all markets, okay? So this is the default settings, okay? And for you guys that have watched my training videos and the weekly training videos, or attending the live sessions, there's certain things that I really like to look for, okay? This, get the crosshairs up here. the bearish prominent point of control with the the bearish prominent point of control that's not traded into, and the value area that's not traded into in the next bar. We got a divergence and a ratio as well. So let me just clear off some of this stuff here because I want to talk about some of the newer setting. I'm going to change this here, swing filter on the delta divergence. I'm going to take it off only at the high or the low. Again, it's going to be linked now to a period of 5. And just as not to confuse anyone with the prominent, I'll just disable the prominent point of controls really quick, and I'm going to disable the value areas. So basically, it's going to be a slightly cleaner chart in the sense of now I'm looking at divergence, delta divergence at swing highs and swing lows. Okay, so you can see here, right, this gold area, gold, all right, gold, 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 gold. Now, one thing that I've always, people always ask me, what's your favorite trade setup? I don't have a favorite trade setup. I sort of have a group of setups that I like to use. And one that I've always talked about, as long as I've released the software, is the ratio and divergence, the bearish ratio, bearish divergence. Now, there is a swing filter here as well for the ratios, okay? And again, it's also linked to the global swing period. And so let's go back to the ratios. Where are we here? What I'm going to do is I'm going to make the draw mode fixed. Or sorry, from fixed, I'm going to go until tested. Okay, I'm going to keep the ratios the same, 30 and 0.69. And with the ratio and divergence set up, if the well, actually, what I should have done is it doesn't really matter, but let's go back here. I'll just keep it here because I just realized if you, let me just turn that off. I'll turn off the swing period. With the ratio and divergence, if you have the ratio coming a bar after the divergence, because historically, right, in the past, I'd only look at divergences at highs or lows, swing highs, swing lows. And what I found is it's just as effective if the divergence comes in at a swing high and swing low, and then the next bar has the ratio. Okay. One other thing, you'll see on the settings, right? Order flow ratio zone size is set to 0. Okay, it's set to 0, so when it's fixed, right, it's just going to show on the bar. It's not going to show any colors. However, if you're going to make it until tested, right, you got to change that from 0 to 1. So if it was fixed, I'll show you. Okay, we have it set to 0 here, order flow ratio zone size. So you can see, right, it's just 112.5. If it was set to 1, that area where it's written up there would be red color or blue color if it was bullish. So right, I'll set it to 1 just to show you the difference. So if it was set to 1, right, you can see it's red. The bullish ones are going to be blue, blue, blue. Okay. But if you're going to draw it out fixed, it can't be 0. It's got to be at least 1. Oh, sorry. So if you want to draw it out until tested, here, where are we here? It's got to be a value of more than 0. It's got to be like 1. It doesn't have to be anything else, as long as it's minimum of 1. Okay, so here, so it's going to be a little bit easier to see. So what I'd be looking for are these areas here. This one, well, it's 9 o'clock. This is also 9 o'clock, where you have the ratio and the divergence here and here. in the bar. So you're going to get the red on top of the gold color, or the blue below the gold color. Okay, that is one of the setups that I've always looked for a decade. Okay, and now with the um, the swing filter for looking at delta divergences, on an intraday basis, I can take a trade like this here because I got the divergence followed by the ratio. Okay, but it's got to come in the bar right afterwards. So that's tens. If it was bonds, if there was one here. Okay, because again, if I'm looking at divergences at highs or lows of the day, I'm not going to get this trade here. Right, there's one here at 4 in the morning, one at 3 in the morning. This one, well, that was the low of the day, but the ratio came in the bar afterwards. Okay, there was one here. But that's, one of how you can use some of the existing tools, the ratios and divergence. Now, let me talk about the order flow gaps here. Now, let me just clean this up. I'll turn off the divergence, and I'm going to turn off the ratios. I got stacked and balanced. I'll turn that one off. Okay, so ratios, I'll just disable that. Now gaps, okay. I'm gonna make it a little darker because it's set at 20, but I'll just make it 60 so you can see it a little bit easier on my chart. Now obviously you could enable a swing filter if you want. You could also draw out the gaps fixed or until tested, right? You see the zone size is 1, so I don't have to worry about whether it's going to appear or not. But we'll start out with it first without the swing filter, okay? So you can see here, now this is bonds, okay? 10 years are going to look pretty similar, right? So you can see on this move up, gap, 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 gap. On the move down, gap, gap. If it was looking at 10 years, right? Kind of similar. Gap here, up, up, gap down, gap, 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 gap. You don't need to use a lot of the other tools, right? If you're looking at something like that, now you can, but obviously remember, the more you put on your chart, the messier it's going to get. So if I were to put on things like, delta divergence, exhaustion prints, I'm just choosing a few here, even open point of controls. If I were just adding a few more things here, it might get a little confusing for you, right? Because your head's going to start to spin thinking, oh, hey, this one's got a gap, but this gap's got a exhaustion print, or this one, even if I had prominent point of controls on here, it'd be lit up on this chart. Try and keep it as simple as possible for things that you want to look at. Okay. Again, it's not about adding everything all at once. Not about making it. Think of this as your buffet line. All the indicators. That's your buffet line. You're going to pick what you want. Maybe this one is crab legs to you, and this one is the Brussels sprouts that you don't like to use. So you don't have to use it. So keep the gaps there. Okay, so now another thing maybe you might want to use on the gaps is the swing filter. People might say, well, this is too many signals for me. I can't trade that. Okay. It depends on the type of trader you are, right? I know guys that trade tens. They're just looking for a signal that they know is reliable, and then they just plow right in because they know on 10 years they can move a lot of size, and they're just trying to grab a few ticks out of the 10 years. But if you want to sort of filter it down, throw in the swing filter, looking at swing highs and swing lows. What do I got it set? I think I set it, yeah, so it's set at 5. I mean, look at that. If you only had one trade this day, a long from here to a short from up here, even if this was your only trade this day, this short, here, in the morning, 3 in the morning here to up here, Okay, you take this short, you get stopped out, fine. This short runs in your direction. This one just sort of goes sideways. This one runs. This one fails and goes down and then turns around and goes back up. That's with the swing filter. Now, one thing to keep in mind, again, with a gap, right, an order flow gap, it's going to measure sort of this gap between the first bar and the second bar. So as the second bar is forming, the gap can appear, but it's not going to be confirmed until the bar closes, because obviously if this bar is still trading, things can change. It can turn around in the bar and close that gap. Then it would obviously no longer be there. Okay. So people always talk about confirmation. What is the confirmation? Well, the second bar, so you got the bar one, bar two. Second bar has to close. Once it closes, once that gap appears, it's not going to disappear. It's there. Okay. That's how it is, right? Just as this is bar one, this is bar two. Now, if we're trading down here, right, we know this is a range-based chart and we're trading down here at the bottom, then there's a high probability it's probably going to close. It does happen once in a while where you do get like that big wick candle down, sort of like this, right? This bar opened up here, traded down as a red candle, then reversed and closed up. But on range-based charts, it mostly just runs. But even this next candle was green for a while because it's trading up here, here, then it turned around and went down. But for this gap to be confirmed, this second bar, because it's a gap between bar one and bar two, it has to close for the gap to be confirmed. So just bear that in mind, because if you were, well, let's put, this is 10, so let's put a 5-minute chart really quick. Okay, so for example, right, if I'm looking at a 5-minute chart, now this is a 5-minute chart on 10s, right? We know 10s, minute-based charts obviously move much different than range-based charts. So like this gap at 4 minutes 59 seconds is about to be confirmed, right? Then boom, in 5 minutes it's confirmed. Okay, whereas on the range-based chart, it's confirmed once the new bar opens. Okay, so the bar has to close, all right? Just as here on a 5-minute chart, 5 minutes have to trade for this gap to be confirmed. But again, at 4 minutes and 50 seconds, you got a good feeling that it probably is going to be confirmed. If you're on a, just really quick, looking at a 1-minute chart, in tens is going to be very difficult. You're not going to see anything, but it's going to be hard to analyze the order flow sometimes just because it just trades like this, 1 or 2 price levels. But if this was, say, like a euro currency, okay, I'm going to talk about euro currency next. Okay, so like here's a gap that was formed, right? Again, this is on a 1-minute chart. So once this bar closes, this gap is confirmed, right? Then the next bar goes inside, then you sort of break out a little bit, just as here. But again, if you're using any of these order flow tools, let the market take you in, because if you get a signal, right, some sort of bearish signal, you want to start breaking down. You don't want to go inside, right, like you're doing here, right? What you want is, okay, I got my signal, then the next bar starts trading lower, right, to capture that move, right? Why you want to get short and say, oh, I got a gap here, I'm going to get short immediately on the open of the next bar, then it trades higher and eventually stops you out. You don't want to take those trades. You want to take the trades that are where the market is moving in your direction, okay? If, this was an 8-range chart, because I'm going to talk about crude next, talk about currencies next, right? You can see here, okay, again, that's at 9 o'clock or just before 9 here, but 5 minutes after the market moving information came out on Friday, right? Here you got a nice move here, nice move down here. Again, range-based chart. So you got the 2 red bars, and then this next bar just goes lower by 2 ticks, trades back up before it comes back down. This is what happens on range-based charts. You're always going to get the break down or break up in the next bar by at least one tick. Generally, sometimes, it's range basis just does this to you, 2 ticks. If you're on a 4 range or 5 range, it could be 1 tick. Now, okay, let's go back to tens real quick. The other one I want to talk about, again, it doesn't matter what market you're looking at. With these, you can use all these setups in any market that you're looking at. Okay, so that was the gaps. So take that off. Now, next one I like to use is the open point of control. And this one, okay, so you'll see these point of controls are colored. If it's bullish, it's dark blue. If it's bearish, it's this kind of this purple color. And it's kind of dark. Okay, it's dark for a point. The point being, if you're using, so here, right, magenta, set at 50, because if you're using the prominent point of controls, we also use magenta, but the opacity is set at 20. Okay, now one of the main differences between this open point of control and prominent point of control is it'd be extremely rare to get an open point of control and a prominent point of control in the same bar. But anyway, basically all it's looking at open point of control is volume migrating higher as price is going higher. Okay, so there's a look back. This one has its own individual look back setting. Just go here, take a look here, right? So it's not linked to the global setting up here, right? It's down here. It's in look back bars, it's called. So what it's doing is looking over the past bars, making sure the point of control is higher. That's it. It's not some secret algo, right? Because what's happening is oftentimes this market is going sideways. Here you see these 1, 2, 3 bars. Now it's starting to break out. Okay, is volume following it higher or not? Period. That's what you want to see. And how can we use the order flow for that? Is simple. Use the point of control. That's the price level in the bar with the most volume. So if we know that that price level, if we know that that point of control is migrating higher, then we got a fairly good idea that price is going higher, volume is going higher. And if we know volume is going higher together with price, we know it's generally going to be a healthy move, right, to the upside. Just as if volume is going down and price is going down. People say, well, does it really have to do that? Well, it should, right? And you can see how as the market's moving higher, the volume is also moving higher. I mean, it's a simple thing, honestly. It's, I mean, in the old days, right, people used to look at volume this way. I'll show you. Right, people used to look at volume down here. Okay, it'd be like, yeah, this bar is a little bit higher, this bar is a little bit higher, this bar is a little bit higher. So you know it's a healthy move. Okay, well, why not just look at the volume where it's trading in the bar? Is it also going higher? Right? Save your eyes from having to squint. Is this one higher than this one? Yeah, it is, like that. Basically that's what you want to see, right? People say, well, this volume didn't go higher. Here, the volume is actually going lower. But in the bar, the volume itself, relative, because now it's relative, right? Because if you're looking at volume here, right, the volume that's being traded in the bar, well, this bar's got 26,000 contracts traded, but the previous bar's got 36,000. The previous bar's got 36,000. Previous bar's got 52,000. But within that bar, the volume itself the heaviest volume in that bar, even though it traded 26,000, which is 10,000 less than the previous bar, is still moving higher. So overall, that volume is moving higher than the previous bar's highs. Okay. Now, I've always been a sort of a fan of, well, like what I call the abandoned or the not traded back into. I don't like to use the word virgin because it's got, people, oh, it's talking about sex or something, but virgin in the sense that it hasn't been traded back into, right? Or that's why I use the term abandoned. And when I see a point of control, an open point of control that's not traded back into in the next bar, to me, that's usually a pretty high percentage trade. You can see here, 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 or here, here. There's one here, one here, one here. And, if you're looking at any other market, right, you still look for the same thing. Now, this is a 4-range chart, so it's going to move a little bit faster, but, there was a bearish one, but you got a bullish one here. If you're trading a 4-range chart, this is euro currency, obviously it's going to move faster. I don't really recommend people to use a 4-range chart unless they're convinced that they can get in and out of a position quickly, as opposed to, I'm going to give it another bar or two to trade. Or if you're on even if you're on a time-based chart, right? An abandoned one here, 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 on this way up. Well, here we went lower, but here, right, on this move down. Again, it's got to be trading below it, right? If it's red, it should be trading below. If it's blue, you want to be trading above it. Okay, don't be like, oh, I got a blue abandoned prominent point of open point of control, but we're trading below it. I'm still gonna get long, right? No, you should be trading above it. If it's abandoned and it's blue, it should be trading above, not below. Okay, so let's see. I got bonds, I got euro currency. Let's talk about mini Dow for a second here. I don't want to talk about e-minis. I spent 2 hours on e-minis the other day. So I'll talk about or mini Dow. Now, this is again the default settings that's set up here. So I'm gonna just disable this stuff so not to confuse you guys on what I want to talk about now. I'll turn off the ratios, prominent point of controls, stacked imbalances, value areas. I mean, I can keep a lot of these on, but I just don't want you to get confused by seeing other things and start thinking something different. Okay, so this is my chart. Now, mini Dow, okay, on a minute-based chart, it trades a lot of prices. Now, you can see this bar here. It's almost, I mean, this is obviously it was 9 o'clock. It's a 100-point move. Okay, these bars here, it's about 30-point move, 30-point move. Here's about 50-point move. On markets that are like that, like mini Dow, MNQ, NQ, what I found from talking to traders is they prefer to use range-based charts. It's a little bit more consistent, as opposed to a chart where you don't know if a bar is going to get stopped out within the bar immediately. But again, it's just a personal choice. So you can see here, right? It's a little more consistent. We're trading quite high, almost 40,000. So 10 points or even 15 point or 15 range bar. Again, it doesn't matter. Just find the one that makes sense to you. I wouldn't use an 8-range chart in this market. I would definitely use something stronger. Now, what I'm going to talk about is accumulation distribution. Okay. Accumulation distribution. Now, I should have just had my trader program the passive traders in control part, because if you're just not using it with passive traders in control, you're going to see a lot of signals. Okay. Right here, like almost every other bar's got a signal. So if you're doing that, that's just showing some signs of accumulation distribution. So actually, it's not that bad, right? Because if you can determine that, hey, you know what, I've hit a swing low, starting to rally, and I see signs of accumulation coming in, you would ride that up, right? But it gets confusing sometimes, in thinner markets. I mean, I'll show you a market like bonds later that are thicker. Um, it could be a bit overwhelming. But the one that puts it on turbocharge, in my opinion, is the passive traders in control. So it's not just a sign of accumulation or distribution, but the passive traders are really being in control. Here. So it's taken out some of the poor signals. You could ride it from here up to here, here up to here. Then sideways activity, catch the major trends. Now, another thing that you can do, right, is add on the swing filter. Right, so it's giving you the swing low, this to the swing high, right here. Well, this is 9 o'clock. But a move like this, here to here. I don't know if there's any signals here. This is the night before, but you should get the idea, right? Of again, this is in mini Dow. Okay, you see here, nice little move here. So it's going to be on the bar itself. So just as soon as the next bar starts, as soon as this bar closes, the next bar opens and starts trading above, that's your sign to get long, from, I don't know, 10 all the way up to 50, 60. It's a 50-point move there. And there'll be ones where it sort of gives you this head fake here and then comes down. That's the difference with the range-based chart. If it was a minute-based chart, again, you have to draw that line. You have to make that conscious decision. Do I want to trade a range-based chart or a minute-based chart? A minute-based chart or a range-based chart. Okay, because the way your setups are going to look, it's going to be different. Right? You don't see as many here on the minute-based chart. If you're on, say, let's go to tens. Now, if it was a market like tens, again, I can't use a minute-based chart there just because it doesn't have enough movement in the 1 minute period. I on a market like tens that trade a lot of any market, interest rates, tens, bonds, I'd be hesitant to use the swing filter simply because there's going to be, I know this market trades a lot of size, and I know how it trades. It trades against the whole curve, right? And not only the curve, tens against bonds, against ultras, against fives, but it also trades against the European markets, right? The bunds. The bunds is a 10-year contract. The gilts. So there's a lot of other stuff going. But if I can identify areas where there's accumulation taking place here, it's just going to give me in my opinion, it's going to give me that advantage, right? People say, well, what about the night session? Can you trade this at night? Well, of course, because look at the volumes. It's strong volumes. European session, there's a lot of arbitrage that goes on, right? There's a lot of these old, I'll say, um, prop firms, these pioneer prop firms where guys are just sitting there at night. Well, now they got it all programmed to trade tens against bonds, or tens against bunds rather, tens against gilts. So to see accumulation taking place, distribution taking place during the European hours is normal, right? Here. Treasury bonds. That was 10 years here. Same thing in the bonds, right? Lesser volume in the bonds, but you're still getting nice signals. Though that's at 9 o'clock, but after 9, here. Imagine this was the only trade you took this day from here to here. Evening session here, evening session, but European hours rather. Here, right? Day session on Thursday. Okay, this one, one tick up. This one just went sideways. So Anyway, guys, I've gone for about an hour here. I'm going to take a look at some questions. I don't want to go on forever. Sunday morning, but there are a lot of questions here I do want to get to really quick. Um, James, James, check your spam folder because I know I've sent it to you like twice. I know I've sent two general emails, but I thought I replied to your email last night. But take a look in your spam folder. Again, I know Google recently changed a lot. Same with Yahoo Mail, even Hotmail. I think is getting blocked nowadays with my emails for some reason. But take a look in your spam folder just in case. But I'll respond to your email again. But I know I responded to it last night. But I'll take a look. Um, okay, so let me see here. Questions. Is the POC a session chart or by bar? POC is by bar, right? Every bar has a point of control, right? And point of control on a footprint chart in a bar is the price level with the most volume. It's on a bar by bar basis, as opposed to if you're looking at a daily volume profile, that would be for the whole day. Now, you could break down your profiles by minutes. There's tools out there that you could draw a profile box, from say, I want to draw from here to here, from this or from this swing low to this swing high. You drop, you just cover this, and it'll give you a point of control, like whatever. It'll probably be down here around '09. Okay, so basically the period that you're looking at. Okay, and in this case, I'm looking at it on a bar by bar basis. Yeah, it's looking at, yes, about the PLC swing. It's not PLC swing, it's PLC wave, but yeah, it's looking on a 3-bar basis. Swing filter, the larger number is stronger, Simon asks. Well, I don't say it's stronger in a sense, right? It's really what it's doing is it's looking over a wider period. So if your swing period is 5, it's just looking over a shorter period. If you set it at 25, it's going to look over a longer period. So, for example, if I say this market is trading, where am I here? Okay, well, let's go back to the end here. Okay, so this is where the market closed on Friday. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25. If the swing filter was set at 25, where's this vertical line F7? I don't use vertical lines that much. So if I wanted to know what the swing high and swing low of this time period is from this blue line to the right, to the end of the chart, well, the swing low is going to be here, swing high is going to be here for this period. So the higher you set it, right, the more data you're looking at, that's going to be your swing low, that's going to be your swing high. If you set it shorter to, you know, like here, right, last 10 bars, I don't know what this is, that's about 10, this would be your swing low, right, because you're not looking at the swing low anymore. This is not going to be your swing high, this will be your swing high. But if you were looking at a period from, here to here between these two bars, this would be your swing low, this would be your swing high. Okay. So does it make it stronger? Well, in a sense, it's looking over a wider period, but your swing high and swing low is going to be different. Yeah, it says, yeah, it can be a lot more noise with time base, especially if you're looking at momentum, right? If you're a momentum trader, You want to be looking at a chart where it's really showing price movement as opposed to time movement. So using a range-based chart might be in your best interest. Well, again, Sarman asks, is it better to use a time-based chart or a range-based chart? Again, it depends on you and the market you're trading, right? Again, I wouldn't use, I gotta, let's go back here, right? If I was looking at the wave, I still wouldn't use a wave on a time-based chart in the bonds or tens. I would still use it, on a range-based chart because that's the type of chart how I use, this is bonds, right? So being here, that one didn't work out. This one didn't work out. Kind of worked out, kind of worked out, kind of worked out here. In previous days, it's a nice move here. This is in the Asian hours. It goes 1, 2 ticks higher. Here it goes 4 or 5 ticks lower. This was a nice move. So again, it's going to vary on the market that you're looking at, right? Because say you're looking at a market like, um, okay, so we'll start here real quick with we'll use meal for example. Start on a range-based chart. Okay, so you can see here, right? You get a lot of this back and forth, right? Bullish, bearish, bullish, bearish, bullish. No, sorry, bullish, bearish, bullish, bullish, bearish, bullish. Then the run starts. Okay, that's chop. Now, of course, obviously, if you're going to use a big swing filter, 10 or something, it would just show this one. Take out this one. Some of these. If you're on a minute-based chart, there's any here. There's one here, a bullish one here. And where you're going to get long is on the breakout of the top of this wave. Where's your stop going to be? It's going to be below that wave. So maybe, well, you wouldn't got stopped out here because it didn't trade above until afterwards, right? Then you could have caught that move. Here, right? This is your low, this is your high of the wave. You're buying that breakout. Really, what the wave is, you're trying to get long on a breakout or get short on a breakdown. Okay, obviously this one started to break out, then eventually failed here. Well, that's right before the close. Night session, you're not going to get much because it's very quiet. Again, here, right? Got your wave, but it's just sitting inside the wave, so you're not going to take this trade. All right, I like to give it 2 bars to sort of break out, but sometimes I use 3. Here it broke down immediately in the next bar. You're getting short 30, 10, 30 even. Again, your stop is above the high here, 31. Comes back up, tests that high, and then sells off. Here's a breakout. Here's a wave here, right? This one, again, next bar inside, you're getting short in here or here. Okay, it doesn't work out. Then you got a bullish one, right? Then you close it, you're getting long, right, to catch this move. People say, this is why I laugh at people say, who trades meal? Well, this move from 326 to 329 is a $300 move right there. So, is time-based better? It can be, but again, it depends on you. Let's go burn through some more questions here. Market weakness reads delta, Neon asks. I'm just going to look. I'm just reading these questions here. Neon asks again, basically buy, sell, limit market orders. Yeah, that's what's in the footprint. It's okay. This is a question that came up the other day, and I know it's kind of for people that are new to reading order flow, right? You hear of aggressive traders, right? Passive traders, um, and for every trade to occur, there is a buyer and a seller, right? There's either an aggressive buyer buying from a passive seller or an aggressive seller selling to a passive buyer. Okay, and you could read that information in the footprint chart. Okay, so like even if there's, like here's a selling a balance of 204, right? It's on the bid side. There was a passive buyers there that took all the aggressive selling that was taking place. They took 204 contracts before the passive buyers gave up. Aggressive sellers still sold it lower, 57 contracts, 13, 48, 24 before the aggressive selling got overrun by the aggressive buying to move the prices back up. Okay. One also asking for the link. Okay. Well, Peter asks, what's indicator gives the best results for S&P, for example, to start with? Well, go to the default settings that you have. Look for, this one I've got accumulation distribution. Um, the easiest one I could recommend to people, it's easiest to see, is the abandoned value areas, like this, 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 or sorry, this one, um, this one, right? Because I know the market is moving away from value. To me, that's the easiest trades to take. Do I ask for the link? Um, Gord asks, so are you saying you look for the bar following the delta divergence with the ratio? Well, I'm looking for both. It could either appear in the same bar, both delta divergence and the ratio. Okay, that's sort of setup one, but setup 1A is the divergence, then in the next bar it has the ratio, not the other way around, not the ratio and then the divergence. You're not going to get that. It's going to be the divergence, and then in the next bar has the bullish or bearish ratio. So you're either going to have bullish or bearish divergence followed by bullish ratio. Okay, so if you have bullish, let's just go back here. Let me just clean up this chart here. So I'll turn off that. And ratios, where are you? And I'll turn off the wave. So again, we'll market this. This is still a meal. I'm just looking for an example here, right? You have your divergence with your bullish ratio. So you have the gold in here, but even if this wasn't a bullish ratio, the bullish ratio came in the next bar, 48. You have your divergence and then the bullish ratio. Not where you have the bullish divergence and then the bearish ratio, not that. That's why I wanted to make that clear. Um, you know, let's just go back to the day session. There's a little more activity. So again, bearish, well, 7:45 is when it closes. Then it reopens at 8:30. So you're not going to really take a trade here at 7:39 going in 4 minutes. But like this, bullish, sorry, bearish ratio, bearish divergence. Let me just, here, see if there's another example in here. It'd be like this, bullish divergence, bullish ratio. In this case, it just went sideways. Hope that clears that up, Gord. Do you look at higher time frame for confirmation continuation? No, I look at the chart that I'm looking at. Bala asks, how do I identify the price action which is going sideways using order flow data? Any key factors we can check on any of your indicators? Well, the easiest way to check if a market's going sideways is one, we'll keep an eye on the point of controls. Are they more or less the same price level? Another way I like to look at it is these value areas. Are they overlapping? Like here, right? Overlapping, overlapping, overlapping. To me, that's a sign of a market going sideways. Or are they starting steadily going lower? Okay, or higher here, like here, here, here. But if they're generally covering the same prices, to me that's a sign of a market going sideways. That's a good question. Yermis also asks, really guys, so a lot of you just I'm gonna send out the links again for the upgrade version for users, but please check your spam folders. Anthony Benora. I'm just looking at your question, Anthony. The license token. Says Simon asks about the strategy analyzer and the Orderflows Trader software. You know, I don't use the strategy analyzer, but I'll, because that question came up the other day. I'm going to ask my programmer about that. He'd know better than me. So I think he's more, again, I'm a neophyte when it comes to programming stuff. I'm a bit old school, even in trading. I'm a point and click guy. But for me, the most automation I use is markers. Neon asks, how long until the actual signal generates when a signal is shown? Well, when the bar is open, if the order flow is there, so for example, right, like this bar here, okay, market is closed, obviously. When the point of control is right here, obviously if this market is open and it's still trading, the point of control can move. Once the bar closes, all, whatever signal, whatever is there, it's set, it's not going to change. Vito asks, are you teaching all this in your course of courses? No, this is just a special training. This is outside of that stuff. And I teach a lot of order flow stuff in the courses, but this is just sort of, I want to talk about how these new tools can help you, because some of these tools, like Open POC, I talk about in the courses. We just haven't had them in the software. You just have to look at the chart yourself, and now you have it on the chart being plotted for you, so you don't have to determine, is this an Open POC or is this a wave? Does the order flow trader is ready to use without the external data supplier Kinetic and an NT8 demo? Well, you need a data feed, Alexander asks. You definitely need a data feed. It's not going to work without data, right? And you need a real-time, if you're trading, obviously you need a real-time data feed. The most efficient, effective way to get a real-time data feed at a low cost is open an account with NinjaTrader. Tell them you're going to trade micros, right? You could open accounts for $250, because if you pay for a real-time data feed from someone like Kinetic, just the CME data alone is going to cost you $125. If you have an account and it's funded, like a real account at a broker like NinjaTrader Brokerage, they will get you the data at a reduced price. It's and it's a data feed that you can trade off of. Kinetic's data feed, you can't trade off of that because it doesn't go anywhere. It's one way, where you need a two-way connection to the exchange if you're going to trade. But like I've got level 1, level 2 data. You don't need level 2 for a footprint. On CME, CBOT, NYMEX, COMEX, and Eurex, I pay like $66 a month for real-time level 1, level 2. If it was level 1, I'd be paying, maybe $50 a month. But if you're going to get data from an outside data vendor, real-time data feed, you're going to pay for CME, then you're going to pay for CBOT, you're going to pay for NYMEX, you're going to pay for COMEX, and whatever other exchanges you want to look at. And it's going to add up really fast. You're going to be talking hundreds of dollars. So the most effective way is just open an account and it'll just get debited from your account. Lynn asks, is there a way to change the right margin? If you're talking about this area here, right, like that, you really just got to scroll. I thought there used to be a way. I forgot how to get it. I'd have to look it up. But even that, I've noticed sometimes on some of these things, like with Ninja, sometimes these things just auto default. But anyway, I'll look into that, Lynn. I thought there used to be a way, I think on 7, where you could set a default setting for this right margin. But on 8, I'm not sure. Okay, Vlad. Yeah, Vlad says it was in his spam. Okay, Thomas. It's weird because again, I'm going to send it out after this presentation. Gord asks, have you ever found a good indicator for a higher time frame? Set up the lower entries. There are some. Gord, I'm going to talk about that probably on the weekly session because that's a little bit more. That'll take me a while to talk about, but I'll take a look at that. Some about. I see your question there, Sam, about your license token. Get that sorted out for you. Yeah, actually, the Luis says about Richard first says, oh, the website is a secure website, so I mean it's got the authentication, all that, but the software is safe. Richard, Luis asks, just a doubt in NinjaTrader. If I want to draw an area in the chart between two prices in the footprint chart, how do I guarantee the footprint comes on top of the drawing? I'm not being able to do it within the area. The footprint goes to the back. So you want to draw an area on the chart between two prices in the footprint chart. Luis, I'm not sure I'm understanding your question. I kind of understand your question, but our footprint chart is actually programmed to appear at the back, at the bottom. As if there was, imagine if there was layers. Luis, send me an email because I have to talk to my program. That's kind of a separate thing because you want yours to appear on the top. Because the problem is, right, there's been some tools that I use from, I have a lot of tools from Ninjacators because I partnered with them on a lot of stuff. So they gave me like a lot of access to their stuff. And, I'm always testing out other tools. And sometimes some tools from third-party vendors would always draw to the back and it wouldn't show up on my footprint chart. So I had my programmer go in and set our footprint to appear on the very bottom. So anything on top of it, right? If you were to add an extra indicator, would appear on top. But Louis, so you're sort of asking sort of something that can do the opposite. So shoot me an email on that. Nestor, okay, I see your email there. Walter, yeah, it is free. Walter's asking about if the upgrade is free. Excuse me. Sorry. For existing users, yes, it is free. Santosh asked about Ninja Renko bars. Okay. I don't have Ninja Renko, but I'll reach out to them and see if I get a copy. Chris asks, PLC Wave with exhaustion principle bar 2 seems to be a high probability trade setup. Yeah, Christian. There's just so many different, again, I could go on. I mean, that's the beauty of it, right? Of the software is there's a lot of different tools. Again, think of it, I'd say like a Swiss Army knife is one way, but like, you go to a buffet, a restaurant, right? There's a lot of things out there. You're not gonna get everything. I mean, some people do, but me, I always check what's the meat, is the crab legs. I go for that um, first, right? So I'm going to use the ones that I like to use, just as you would eat the meals you like to eat. But then you can find, combinations, mashed potatoes and gravy, Delta breakout and something, or exhaustion prints and, divergence, or as Chris says, POC wave. Because again, you don't have to worry about it because everybody looks at order flow differently. All right, so you're not gonna get millions in, and not everybody uses order flow. People go kicking and screaming sometimes into order flow. Richard, I don't use algo and order flow 7 on the same chart. I use them on different ones. I just throw the algo on a simple bar chart. It's just easier for me because I'm looking at certain things taking place with the algo. The blue Daniel asks, when does the blue line print after one bar closes? Yeah, it'll print actually things. Hang on here, I'm just writing something down here. So like, for example, like these, as soon as this ratio, like in this bar, as this bar is forming, as soon as this ratio is taking place, it will print as long as the order flow stays there. Okay. If this bar turns red, it's not going to print as a blue line or bullish ratio. Then it'll start analyzing the ratio from the top side of the bar. Okay. Alan asks, will these setups be added to the vault? No, it's different. Juan asks, what confluences signal have you tested with these news indicators between them or existent? Well, like, okay, so let's go back to these indicators real quick. A lot of these, the existing indicators, I still use them, right? But one of the things that, not like, I hate to call it secret sauce, but I've always told people you got to look at these things in context of the market, right? Anything in context of the market. So I always like to trade around the edges of the market, meaning highs or lows, or swing highs or swing lows. That's why it was important to get this swing period on here. So if I'm looking for, an exhaustion print, what is this market? So this is meal. I don't know. I'd probably use a small number, 3, right? If I'm looking for exhaustion in the market, right, I'm going to be looking for it to come after a move. To me, that's going to give me a potential for a reversal. And it was hard for me to get traders to understand why you'd be looking for exhaustion at a swing high or swing low, because they're like, well, why? I'm like, well, if you're looking for exhaustion, imagine you're running a race. You're not gonna get exhausted in the first 10 meters. Some people might, nowadays I might, but after you run for a half a mile, that's when you're gonna start feeling exhausted, just as if a market is making a move, right? Where are you going to look for exhaustion after the move has taken place, right? For a potential reversal. So to me, that's like the most biggest thing here. Juan asks, yeah, to automate it. Yeah, we're going to probably get something going on about that. Francis asks, okay, Francis, I'll check for your email. But I didn't see it either. Yeah, the session is recorded, Peter. Irene, thanks. Steve asked for NQ. Okay, we got some time here. Now, I'll be honest though, NQ is not a market that, I mean, I will look at NQ, but I haven't traded this market in a long time. It just moves too much for me. I prefer markets that are a little bit more easier to read the order flow, right? And to be honest, I don't even look at it on a 1 minute chart. What I do look at it is on a 30-second chart. Now, with this market, people always ask, what are you going to look for? Well, you can start with, a lot of the same things. You can see these are the divergences here that are set up. Now this is, and you can see the exhaustion print here. But it's not like I'm looking at anything super out of the ordinary, right? I would look at the value areas, see what value areas are doing. Are they being abandoned? So I'd keep them until tested. But I just sort of, and to be honest, in a market like NQ, prominent point controls don't play that big a role, just because the bars are kind of wide. But I'd be looking for these abandoned value areas like this. Again, people always ask, what's the best setup? Well, the easiest setup to see is very visual, is the abandoned value area, an area that's not traded into in the next bar, just as this one, this one, this one, right here, 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 here. Irene, again, thanks. Johnny also says software is wonderful. Sakani asks, in your experience, do you have noticed any setups with indicators that tend to work well when looking to trade gold? I'm new to all this and just looking for some insight. Well, gold's a nice market actually, for trading, because you tend to get a lot of size go through it out of nowhere. Size just comes in. But this is, let's go back to a minute-based chart. Let's start there. Minute-based chart is always a good starting point. Simple thing, right? The value areas. Then you can start adding, here's a divergence with, an exhaustion print. Again, same one that I had on the previous charts, right? I don't need to start adding on, real different stuff unless I want to. Okay, so let's take off. But value areas is a great tool. I think more traders should use it. We'll take off the exhaustion print. We'll take off delta. We'll use the accumulation distribution. I'll just leave it as swing filter off and passive traders in control. See how that turns out. All right, you see accumulation. All right, as this market just keeps running up on Friday, right? Some distribution, okay. People say, well, we got such a small move. But yeah, we just ran up, 20 bucks. Maybe there's some profit taking, more accumulation. That's on a 1 minute. Gord was asking about, longer time frames. I'll be honest, for me, a longer time frame on order flows is 5 minutes if you'd consider that long. But same things you're gonna look for: accumulation, accumulation, accumulation. The value area, right? That's not traded into. I mean, look at this. If you're trading a 5-minute chart during the day session, value area that's not traded into, you drop from 60 down to almost 50. Then on the way back up, again from 60 or 70, right, all the way up to 80s, 90s. Okay, and you can see the accumulation on the way up here. These dark blue lines that are not traded. I mean, almost every bar here on the way up's got accumulation taking place. Accumulation on moves up, distribution on the moves down. So as you get higher, right, then you might start seeing some signs of distribution here, right, going into the close. I mean, it's normal this, after you have a big run up to start seeing distribution come in, right, especially going into the close. It's 1 o'clock here, right, and this market just more or less goes sideways a little bit lower into the close. Emmanuel asks, will this video be available? Yep, it will be. Waleed says, by the way, upgrading to the latest NT software. NT upgrades, you must have been on a way earlier version, Waleed. Remember last spring, I think they came out with the 8.1, because on my older PC, the one that I use for like email and surfing the internet and stuff, I still got 8.0.28 on there, and the Orderflows Trader won't work on there. 8.1 has been out for over a year now, about a year, and it's gone through several iterations already. So yeah, and I'll be honest, the first 6 months I hated it, but you have to get updated on it, unfortunately. But if you're doing the upgrade of NT software, you're not going to need all you need is your login credentials, right? The templates, if you're going to use the software, the Orderflows Trader 7, you got to create a new template anyway. Okay, so again, if you want to use it, I mean, it's unfortunate you have to, right? And again, I can't do anything about it, because if you're on the older version of Orderflows Trader, or sorry, of NinjaTrader, and you add this new version of Orderflows Trader, it's not going to work. It's going to cause your system to hang, because there's functions, it's doing things, it's trying to look for certain functions on the older version of NinjaTrader that just aren't there, right? So of course it's not going to work. It's going to cause it to hang anyway. And you think, there's nothing more frustrating than trying to open Ninja, because I went through that. Months ago. My program, like, it's not working. It's because I had the older version up, or the older template up, and it's trying to access stuff that's just not there to access, and it would cause it to hang. So it's unfortunate, but it has to be done. Luciana says, yeah, NinjaTrader data is $12 a month for level 1. All right, everyone, I'm going to, I'll end it there. So again, thanks for coming out. It's Sunday morning. It's a big ask. I said I sort of sprung this on you in the last 24 hours. I'm going to do this, so I appreciate your sticking through to the end on a Sunday. So have a great week, everybody. And again, I'm going to go through again all these questions. I see I got James, Juan, Dwight, Miss everybody asking for the email. I'll email it out again to you guys, but again, I'll try to email you guys separately. Maybe I'll send it off from my personal email. Maybe that will go through for some reason. Sometimes it works, sometimes it doesn't. But have a great rest of your weekend, everybody. And if you can make it on if you have the software and you're on the list for the weekly trainings on Wednesday, be sure to make it out there. All right, everyone. Have a great weekend. Catch you later. Bye-bye.